Let me start with something very important. People online love simplifying Dubai real estate into this one cute little sentence. You only need 50K to start. I agree with it sometimes too, because yes, in many cases, $50,000 can get you into the market. But here's the problem. 50K is almost never the true amount you will end up spending, because Dubai is an open market, fee-based economy. Everything is efficient, transparent, and well-regulated, but everything has associated costs. So today I'll walk you exactly through what most people ignore, how much money you actually need. And trust me, if you stay until the end, you will understand why many investors fail, why some get stressed, and why some others prepare double. Hit that thumbs up button and let's get into it. First of all, we have the down payment. Yes, technically you can begin considering properties in Dubai with around 50,000 US dollars, which is roughly 180,000 dirhams. But here's what determines the reality. There are different types of mortgages. There is first the UAE resident mortgage with 20% down payment for you as an expat. So you need to live in Dubai or UAE and have a minimum salary to qualify for this 20% down payment. And usually the minimum property value is in around 750 to 1 million dirhams because frankly there is not too much to choose from if you go below this. So yes, 50K can start the conversation. On the other side, the non-resident mortgage, here you need around 40% or the base case scenario 50% down payment to qualify. So if you live abroad and you want to invest via mortgage, then this is the option for you. Even if your bank pre-approves you, the conditions are usually stricter, and sometimes you might even be asked for the property value to be in around 1.5 to 2 million dirhams. Finally, if you're a cash buyer, if you're from Europe, UK, or anywhere else, and you want to avoid the mortgage process, then be ready to pay the full price up front, still paying all the fees, exchange rate volatility, and if it's an off-plan, then you will pay all the other setup costs for the actual property when you install the meters and everything else. That's why the down payments are just the beginning. While most new investors think that's the destination and the full price that you're going to pay, but that's not really true. While it's just literally the door handle, and while this also doesn't really need to scare you and hold you off from this investment, because again, this could be a very life-changing investment, and if it's done right, it will even bring you really good profits. Yet you have to consider all the other associated costs, because otherwise you will be stuck with an investment that you might not even be able to keep up with. Number 2 is the mandatory fees that shock the first-time buyers. Dubai is transparent, which is great, but this doesn't mean it's cheap. So you need to know the unavoidable fees. DLD transfer fee of 4%, which is fixed and it's mandatory for all cases. Based on a property price, no exceptions. So if it's a 1 million dirham property, then you're going to pay 40,000 in DLD fees right away. You have admin and trustee fees. These are usually paid on transfer day and it's in around 4,000 to 5,000 dirhams. Agent commissions of 2% plus VAT. Most transactions you as a buyer will pay the 2%. So again, on a case of 1 million, you will pay 20,000 immediately. And if taken a loan, then you have the mortgage registration fees as well. 0.25% of the loan value, around 290 dirhams admin fees, and the valuation cost as well, which is usually in around 3,000 dirhams. There might be even conveyancing or handover charges, which usually is optional, but it's highly recommended, and it's in around 5,000 to 7,000 dirhams. By the time you sign all the papers, these fees alone can be up to 6 to 7% of the entire property value. This is why I always tell my advisory clients in the calls that if you don't add all these costs up to your expectations, you might be crushed. So by the way, if you're watching this and you're confused about what kind of fees you should be expecting, then I offer one-on-one advisory calls where I go through your budget, your bank situation, residency, and any other questions you might have also on the mortgage cases, and calculate the exact breakdown of your costs. No fluff, just numbers, clarity, and a personalized roadmap. If you want to get on a call, link in the description, and see you in there. There are also small things that add up fast. A lot of long-term residents don't know these rules, so you can imagine how many investors actually miss them. When you're setting up your electricity and water account or the DEWA account, then you actually have to have one account for you as the owner/landlord, and you also have to have an account for your tenant. So the price is 2,000 dirhams for apartments paid by separately, one by the landlord and another one by the tenant. So here's the trap. If your tenant delays the registration or moves out unexpectedly, or just the unit sits empty, you pay the bills during the transition months every time. Electricity and AC isn't free, and the common charges for the maintenance also adds up. There's also the Ijari registration fees for your contract with the tenant. So even if your tenant pays some portions, you handle the whole process. Some buildings charge chilled water separately, so these usually in Dubai are called chiller fees. Others included, but you have to check for it before putting the price on that annual rent. And the service charges, it depends on the community. Typically, it's in between 10 to 30 dirhams per square foot. So this is your annual running cost for the maintenance of the property. That's why if you don't check it correctly, it could end up that for a unit, which is 650 square foot, these fees could be either 6,500 dirhams, or they could add up to 20,000 dirhams if there is a higher service charge in that property. These little things will reduce your ROI if unplanned. Number 4, if you're going for a mortgage, then you also necessarily have to look into all the mortgage fees. Most investors and most even end users look down just for the down payment, but not to the other sunk costs and operational costs associated with this. Some of the sunk costs include the valuation fee, which I previously mentioned. It's in around 3,000 for a one-bedroom apartment, let's say. There's the bank processing fee of around 1% usually. Then there is the mortgage registration for 0.25%. And finally, you have some annual costs. That is the life insurance and the property insurance. They're usually not as high, but they do add up, so you need to know exactly what you're counting in your Excel financials. The insurances, by the way, are compulsory wherever in the world you are and you're taking a mortgage. If you do take a mortgage, you have to pay for this. Finally, you need to know your early settlement penalties, and these are usually standardized, but you have to actually ask and understand if you're getting into this situation or in a case of a mortgage, and you really need to know the exit strategy. These are not optional. Some of them, they might be negotiable, but not usually. And these are not shown on the listing websites. Yearly ownership costs. This is where most investors get hurt. While you might consider just the down payments plus all the compulsory additional costs in the case of a off-plan or in the case of a ready property that you pay in cash, or even more costs if you get a mortgage, although I still believe that is a very good case if you're an expat, but still you have to count all this in. Plus, expect some other yearly expenses, and you definitely need to have some kind of a buffer to cover this and not get into a panic mode. Maintenance and repairs for your actual unit, service charges that I already mentioned, and some vacancy periods too, deep cleaning and painting between the tenants. Usually, if you do long term, the tenant would cover this at the end of the tenancy, but you still have to count this in because sometimes they might not. So really, you need to get your property ready for the next tenancy lease. Replacement of any kind of appliances and some kind of a small emergency fund. Dubai is very efficient, but everything moves very fast. And labor is available, and it's actually not very expensive, but it's not free. So you definitely need to count it in. You need to calculate your first 12 to 18 months realistically, and maybe even set aside 1 or 2 months of no vacancy. This leads into the next point, which is the vacancy reality and not theory. Most beginners assume that the unit will be rented for the entire year, which usually is the case if you do long-term rentals, but you still never should assume that because anything could happen. Your tenant could move out unexpectedly as well. The good case scenario, 1 month of Vacancy. If marketed well, priced correctly, attractive layout, then this is more or less what you should set aside just in case in between the tenancies. So you can actually have some time to find the right tenant who pays the right price that you really want and you're comfortable with. In a saturated cluster, you should actually expect around 1.5 to 2 months. And if overpriced, low floor, or any kind of other bad situation associated to your unit, then it could be up to even half a year. Those cases are more rare, and usually if you end up there, you probably will consider other options such as converting it into an Airbnb or other type of short-term letting. But nevertheless, this means that even a good property should be budgeted with at least 1 month vacancy per year in a good case scenario. This is why choosing the right project matters more than just choosing the cheapest one. The next point is the 3-scenario planning, which is something that I use in all my analysis and evaluations of really interesting cases here in Dubai, but also anywhere else in the world, and this could be your secret weapon. I usually plan according to the worst case scenario, the good case scenario, and the best case scenario. Why I do that? Because if your investment only works in the best case scenario, then your investment is actually bad. If it works in the worst case scenario, it's solid and it would outperform your expectations. When I model deals for clients in the advisory calls that I do, I always start with asking, what if nothing goes right? If the deal works at that level, you're safe. You should account for some other maybe unexpected or not even very obvious costs. For non-residents, this could be flights to Dubai for viewing or signing papers, exchange rate fees every time you convert your own currency to dirham or vice versa, remittance charges, and also local expenses whenever you visit. This could easily cost hundreds to thousands of dollars per year, and this will definitely eat up from your expected profits. You also need to have property management considerations. If you're remote, or you also just simply want to give your property to a property manager to deal with it. Management fee for long-term rentals usually is around 5% up to 10% of the annual rent, or there is a cap for every kind of type of apartments or a different case for the villas. So it all depends really case by case, but that's exactly why you need to consider that, and you need to reach out to the experts who can actually clarify this for you. And there is, of course, many more percentages if it's short-term letting. In the case of Airbnb, it could even go up to 25% per year. Onboarding and maintenance fees, also all the inspections, and of course the damage disputes. This point is essential if you live abroad and want to budget this in advance, because that's the only way you're going to end up with a good investment case. Finally, choosing the right unit, not just any unit. Layout, floor, and view matter. Parking matters as well, but it's mostly included, so you kinda at least can take this off from your head and go and just check the right ones that fit into the previous criteria. Access matters as well, more and more, as many other people are actually not just investing in Dubai, but actually moving to Dubai. So access is becoming increasingly more important. And the same goes to the noise levels. 2 units in the same tower can have the same price, the same layout, and of course is the same developer, but one can outperform the other by even 40%. This is exactly why investors need guidance, and why many people end up with lower returns than expected. Before we continue, huge thanks to Silver Springs Properties, the sponsor of this video. They're one of Dubai's most reliable boutique agencies, transparent, investor-friendly, and connected with all major developers. If you want a team who actually fights for your interests and helps you avoid overpriced inventory, check out the links in the description. Now, here are some additional points most investors never considered when actually planning their budgets. If you're dealing with off-plans, then there are handover delays, which you definitely need to count into your investment budget, because this, if you're expecting to rent it out when handed over, then it might eat up of your expected profits of first 3 to 6 months when it's delayed. Market timing and seasonality is very important. Developer reputation and service charges in different communities also. Everything is a trade-off. Finally, community maturing and the exit strategy. All this should be considered before you actually put your money into any kind of project. Will you flip, hold for 5 to 7 years, refinance, or switch to short-term rental? If you don't know, you're not ready to buy. So how much do you actually need to invest in Dubai real estate? If your targeted entry is around 50,000 US dollars, here's the truth. 50K will only be your down payment in most good cases. And that doesn't mean it's bad. It's just the reality for the actual projects, at least from my experience and from what I've seen in my clients, friends, and many more people that I deal with. What you actually will need is probably 50K in down payments, another 15 to 25,000 in any kind of associated fees. Yes, that might sound a lot, but I'd like to be on the safer side with a bit of a buffer. That's why for utilities, service charges, and vacancies, I would put another up to 10K buffer per year and another $10,000 to $20,000 in emergency fund. So the total realistic starting capital is around 100 to 120,000 US dollars. And yes, that's almost double of what you expected. Real estate is not cheap, but real estate is the best when planned correctly. If you want help with finding a non-biased, investment-grade, good property, I offer the property sourcing service, which is fixed fee, no developer pressure, just your budget or actually underneath. I simply find the right deal based on your strategy, ROI, and future resale value. This is how you avoid mistakes that cost thousands. So if you're interested, hit the links in the description below. Dubai is one of the best property markets in the world, but only if you approach it realistically. Most investors underestimate the required capital, and that's actually not only in Dubai, it could be anywhere else in the world. But in this case, since we focus on Dubai, I gave you all the essential tools that you need to know before you invest. If you prepare double, you'll enjoy the journey. It's going to be smoother and you'll actually see the benefits of it. If you'll prepare correctly, you'll also profit. And if you calculate the worst case scenarios, you'll always be safe. So with that, I thank you for watching and hit the thumbs up button, and I'll see you in the next video.